And welcome to today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management. This time of year, your mind is probably on Thanksgiving turkey and getting ready for Christmas and all of those fun things. But Wayne, there is another topic that people should be thinking about this time of year, isn't it?
Well, I think they should be thinking about it, but a lot of folks, it's not on their mind. And we're talking about taxes.
Taxes.
Why think of taxes at the end of October, mid-November? What's the purpose of it? And today's show, we're going to talk about some things you can do prior to year end to help you with your taxes.
Sure. Well, I keep going back. I was talking to some folks the other day, and I keep going back to this little phrase that you have taught me very well about the two tax codes in America. And one for the informed and one for the uninformed.
Right.
Kind of hand in hand with that is also the planning and the
one for the proactive person, and and another one for the non-proactive person. That they do go hand in hand. Some people have the knowledge and or at least the resources to lower their taxes. Working through a CPA or a certified financial planner, but they don't take the time.
Right.
They don't invest the time to do it. And if they did, which you'll see, through some of these bullet points we're going to talk about today, how easy it is to cut your taxes if you want to.
Right. And it's not, folks. We're not talking about trying to manipulate anything. We're talking about legitimate tax advantages that are there. But people simply, sometimes they're either uninformed or they don't proactively seek them and do things with their finances that will save them money.
Right. Yeah. You have to want to do it, and you want to invest some time and some thought, and you want to do it now. You don't want to wait till after the first of the year, because then it's too late.
Right.
Other than putting an IRA contribution in prior to filing your taxes or whatever. So we're going to talk about some proactive things that you can do right now to lower your taxes for 2013.
So as we progress through today's program and some segments, we've got 5 or 6 topics that we're going to hit on. So if you call your spouse or your friends and let them know that we're going to be talking about saving money on our taxes for this calendar year, some things that we can do.
Most of the items for this calendar year, the first item we're going to talk about is for down the road.
Okay.
And that is Roth conversions.
Okay.
And a Roth conversion is taking some money from a traditional IRA or retirement plan, an account you haven't been taxed on yet.
Okay.
And voluntarily and willfully paying the tax on it now in order to convert it to a Roth IRA. A Roth IRA grows tax-free, and you can use it tax-free down the road. A tax-free account. I mean, the government doesn't do that a whole lot, and so many people don't take advantage of that. So we're kind of doing the opposite of what I've just been talking about, saving on taxes for this year. We're not going to save this year. We're going to cost us more this year.
Okay.
But it's going to save a pile down the road. We talk about taxing the crop or taxing the seed. What would you rather do? In a Roth IRA, you tax the seed, and whatever it grows to, the crop, is tax-free.
Wow.
A regular IRA, you get a tax deduction on the seed, but whatever it grows to, you're going to pay tax on the crop.
Sure.
Most people would rather pay tax on the smaller seed than the larger crop. That's what a Roth is.
So what you're implying here, what I'm hearing, is we take a traditional IRA, pick a number, $10,000, and we convert that to a Roth. We pay tax on $10,000 at today's rates.
Correct.
And in 10 years or 15 years, when the Roth grows, it could be worth X, and that's tax-free.
It's tax-free. Yeah, I mean, the math works, and there's benefits to doing it now for some people, because they may be in a lower tax bracket now, and they may be in a higher one down the road. The government indicates that they need more revenue. That means higher taxes. So a lot of folks feel taxes are going to be higher down the road, 10, 20 years from now. So let's get the tax out of the way today.
Okay.
That, again, it depends on your tax bracket. We always like to work with professionals, good attorneys, good CPAs, and we don't just want to do that.
Right.
We don't want to just convert willfully an unthought about amount.
Right.
We want to have the CPA look at it. The CPA run a what-if tax scenario. So what if, like, if I have a client that's going to do that, we say, okay, what if this client converts 10 or 20,000? What will this do to their taxes? Will it bump their tax bracket? Will it cause them to have more tax on their Social Security? Whatever the case,
Right.
we have the CPA look at it first.
Okay.
If it makes sense, then we do it.
Sure.
But it's a great thing to do before the end of the year. We have a couple months left.
Right. Well, that's exactly why you should pick up the phone, 866-626-3990, and give Wayne's office a call and set up an appointment to go in and sit down with Wayne and say, this is where I'm at, and this is what we're thinking. What makes sense? And don't make these decisions without being informed. We're going to take a little break right here. When we come back, we're going to continue on end of year tax planning and some of the things that can benefit you for now and in the future, but we'll be back right after this.